Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is a special conversation on our earnings front. We will be focusing on Pidilite Industries. Remember, the company has posted a 40% jump on a year-on-year basis on the profitability of the company. We've also seen the company's EBITDA improve this time around. We have also seen, that the company's revenues have come in 8.2% higher year-on-year, now at, about 3,148 crore rupees. Now, what we've also seen is that the EBITDA has now come in at 623 crores, about a 10% higher. We've also seen that the margins have now stood at 20.1%, largely steady from 19.9% that we had seen in the year ago period as well. Let's welcome the top management of the firm to help us understand what has been the key contributing factor for the quarterly earnings and what's the outlook going forward. Warm welcome to Mr. Sudhanshu Vats. He's the Managing Director of Pidilite Industries and he joins in the program with us. Warm welcome to you, sir. Thank you so much for joining in. Do let us know, sir, as far as the key contributing factors that have led to the quarterly earnings this time around. Are you, yourself satisfied with the performance that the company has given?
With the set of numbers that we have posted. Under the current circumstances, there is a good set of numbers that Pidilite has posted. And as far as we have always stated that we will continue to deliver double-digit profitable underlying volume growth, Sakshi. And I think, when we say of underlying volume growth, this quarter we've delivered 9.8%. We stay focused on underlying volume growth, which is not total volume growth. Our total volume growth is much higher than the underlying volume growth. Underlying volume growth takes into account volume and mix, so therefore the quality of volume that's delivered as well. And I think that's something which is very satisfactory. As far as the key enablers in delivering this for this quarter, and I think that's been the trend for some time, is our first and foremost focus on strengthening our portfolio, Sakshi. So we are continuing to strengthen our portfolio. The growth segment of our portfolio, we divide our portfolio into core, growth, pioneer. Growth part of our portfolio has delivered really good results, very satisfactory results, delivered by, Roff and Dr. Fixit particularly had a standout performance within this quarter that went by. So strengthening the portfolio, number one. Number two, continuing to build bonds with our consumers. And I think if you look at our new campaign on Dr. Fixit, which came out in last quarter with Amitabh Bachchan, but the 360-degree around that campaign, the work which we did with KBC on Dr. Fixit expert question, or the work which we did on cricket with India-England series on Dr. Fixit, expert answer through DRS. I think something that is work which we've continuously been doing. The Fevicol brand continues to endear consumers. The Fevicol Kala Tika campaign in Kumbh was extremely well received. So I think we've been doing consistently good work in this space and we will continue to deliver that as we go forward. I think the third element which has enabled this and which we are very happy about is our innovation rate is continuously growing. The product innovations we've done, the delivery of some of them, whether it is Fevicol Hyper in our Fevicol main brand, or the new segments within Fevicol on Fevicol Relam or Fevicol Nail Free Ultra have all done well. Our renovation of our consumer Fevicol brand with a very attractive packaging that is not only ergonomically better for children, but it's better from the point of view of spillage. And it's, of course, indeed beautiful. We've got a full range there. So that's been very well received by the consumers as we go forward. So innovation being our third pillar. And lastly, continuing to focus on go-to-market, on distribution, and below-the-line field marketing have been the hallmark of the work which we've got in this last quarter.
Right. Now, Mr. Vats, you did talk about the volume growth. I wanted to understand the picture of volume growth versus value growth that you have seen pan out in this quarter in FY25, and what's the outlook for FY26? How will both vis-a-vis each other pan out, sir?
So, Sakshi, I think we've been talking about now bridging the underlying volume growth and value growth. And if you look at quarter four, which has come in, which is, and I will specifically talk about standalone results here because that better reflects this. So from a standalone results point of view, on a 9.8% underlying volume growth, we've delivered a 10.2% revenue growth. So now price has pretty much caught up, arguably is marginally ahead. You're getting a little bit of a kicker of price. I think moving forward with raw material remaining benign, I think you will continue to see the underlying volume growth and value growth pedaling together, going hand in hand. So I think in the quarters and the year to come, the two should be almost together. If unless and if at all, the revenue growth could be marginally ahead of the underlying volume growth.
Okay, got that. Let's also look at, sir, some of the other aspects. I wanted to get a picture from you. How is the demand trend and the client confidence building up at this point in time, sir? Do you think you are seeing some improvement over last couple of quarters?
Yes, Sakshi, we are distinctly seeing an improvement. As a company, indeed, we've navigated these waters much better. As you've seen, we've delivered almost a double-digit underlying volume growth through the year.
Yes.
I think, having said that, we are seeing improvement in urban. We've delivered, as always, we've delivered slightly better rural growth than urban growth. But what I'm very happy to see is the uptick in urban growth as well, which we are seeing now. And I think what is enabling our sector particularly is, I think, the continued momentum on construction sector, the increased government spending, and hopefully that will continue. And lastly, I think the second consecutive good monsoon, and I think what is the prediction now, should augur well for all of us.
Okay. Do help us understand, sir, when we talk about the raw material prices, what's the trajectory you expect from here on? Did you see some benefit coming in Q4? Has that translated into any margin impact? What's the outlook going forward?
So, quarter four, we did see some improvement in our, so raw material. That translated into an improvement in our gross margin in quarter four as you look at our numbers. So gross margin indeed went up. We deployed a lot of it into advertising and sales promotion, a little bit for manpower, for our pioneering businesses and all that. But moving forward, we continue to see raw material benign, at least for the foreseeable couple of quarters. So therefore we will continue to maintain and deliver within our guided corridor of 20 to 24% EBITDA margin, Sakshi. And we will continue to make the right investments to grow our business in India.
Okay. What was the average VAM consumption rate, sir, during the quarter, and what's the expectation going forward?
So average VAM consumption during the quarter was a tide above $900. So therefore that's so. And what we see basically is the same pattern continuing in the coming quarter as well. So it's in that zone of about $900, slightly up and down. So we are seeing it that we will continue to watch that space, and we think that it will remain in that. It will remain range bound in that zone.
Okay. Now also help us understand, sir, you did talk about, enhancing of your product portfolio at this point in time. Going ahead for FY26, what's going to be the plan, sir? Are there any products that you're going to be probably concentrating more on building up further? Also, if you could help us understand a little bit, on the competition side, sir, how are you really looking at some of the aspects there?
So, as far as Sakshi, we are concerned, we focus a lot on developing the market. And fortunately, in many of our categories, the market is still like if you know, in construction chemicals or in waterproofing, 4 out of 10 Indians still don't waterproof. So therefore, that is one segment we are very bullish on. I talked about that campaign to you in last quarter. We will continue to have focus in that space. Similarly, tile adhesives under our brand Rock will continue to deliver. As we move forward, it has delivered robust growth, but we are very hopeful because again, there is a lot of market development work to be done, Sakshi. And as Pidilite, these are areas which are pioneering areas where we build the market and we tend to do very well. From our established core portfolio point of view, premiumization will continue. I talked to you about Fevicol Hyper, which is doing very well. Also, Nail Free Ultra or Relam under Fevicol. In our arts and craft portfolio, you will continue to see innovative products as we go forward. So I think that's an area where premiumization and more of innovation will continue.
Okay, premiumization and more innovation will also continue as well. Sir, how do you really see the space evolving for both non-premium products in terms of comebacks, or do you see even that happening?
Yeah, we always have what we call some of our flanking brands. I think for fighting competition in very specific regions or zones or sometimes towns and states. And I think that is something which we will keep working on. I can share with you the performance of our flanking portfolio also in the quarter gone by has been very encouraging, and we will keep working on this space as well.
Okay. What about the paint space, sir? What's the competition like on that space? A lot of players entering there, building up their portfolios on that front. How are you looking at that?
So we want to enter paints from the bottom of India, as you know. We've had our pilot on in the 5 states, largely in South India. I think we are making steady progress in this pilot. We are basically making progress quarter on quarter, month on month. There is still more work to be done as far as Pidilite is concerned. We will continue to stay focused in the way we want to build our portfolio and our brand Aisha, and that's something which we will keep doing. We are unlikely to get distracted with all the action that is happening in top towns and all the competitive intensity which is there.
Okay. So, will you be able to also help me understand, maybe if not immediately, but over the long term, what is the kind of portion of paint segment to the revenues that you would be expecting, sir?
So this is too early, Sakshi, to say at the moment. We will stay focused on delivering our pilot, and let's see how we get our pilot results and how we develop from there. We want to be an important player in urban, which is rural and small town in India, and that's something which we will keep working on.
Okay. So, do help us understand a medium term outlook given the economic and global uncertainties that we are looking at this point in time. How do you see that shaping up?
Sakshi, that's a very difficult question at this moment, but we remain, as we've said, cautiously optimistic. Demand side seems to be optimistic in India. Fundamentals seem to be good or strong, I would say. But as you know, geopolitical situation is very fragile, and its economic conditions are also very unpredictable at this moment. So we need to navigate this and see how best we go forward. And I think if we find a settlement to some of the things which are going on very quickly, both on the geopolitical situation and also on the economic front, I think it will be good for India and for almost all of us.
Okay. Any outlook on the real estate space, sir? Since that really consumes a large part of your products as well, how is the growth panning out there currently?
So I think we are seeing a good uptick in the overall construction sector. I wouldn't limit only to real estate. I would say, I think, multiple, so whether it is residential sector or commercial sector, or even hospitality sector or health sector, we are seeing considerable, room for growth, and we are seeing considerable activity in this space. So we remain very buoyant on the construction sector.
Okay. And anything on the pricing that you can guide for us, sir, towards the end of my interaction with you, sir, on in FY26? How is that panning out?
So we always have a clear benchmark, Sakshi, on what should be the pricing for each of our products, what should be the premiums we should enjoy for certain of our brands, and what is that premium band. We are very conscious of that, because what we are focused on, Sakshi, is continuing to deliver double-digit underlying volume growth, because that, I think, is the moat that we will need to continue to build on so that we deliver consistently a profitable double-digit underlying volume growth.
What about margin outlook, sir, for FY26? Any band that you could share with us that you're looking at?
So we continue to stay focused on the corridor we have shared always on EBITDA margins between 20 to 24%, and I think you should expect that to be the part of our profitable underlying volume growth.
Fair point. Thank you so much, sir, and all the very best for the upcoming quarters. It's always a pleasure to host you on Business Today Television and seek all the insights from the industry and your quarterlies. All the best for the upcoming quarters as well, sir. Thank you.
Thank you. Thanks, Sakshi. It's always a pleasure talking to you. Thank you.
Thank you so much. Always my pleasure, sir. All right, viewers, we'll wrap it up on that note. Exclusive conversation going in with Pidilite management on the things that have been shaping up the quarterly earnings this time around, and of course, what's the outlook going forward. I hope this has given you enough and more clarity. Do stay tuned on Business Today Television to keep catching all the earnings conversations, and of course, apart from that, all the market updates too.
If you like the video, do like, comment, share and subscribe. If you like the video, do like, comment, share and subscribe.